Hello everyone, welcome to the Renewable Energy Study Group. In the today's session, we're going to talk about the financial modeling of 10 kilowatt of a solar system. In this particular financial modeling, we're going to consider the 100% of the equity investment and 0% of the loan model we're going to consider over here. So basically in the financial modeling, actually this parameter is very much important when we are preparing the design report or when we are convincing to the investors or the bankers or the particular consumer regarding the installation of the solar power plant. So whenever actually we are try to particularly formulate this Excel sheet in this financial modeling actually, so one by one and each and every parameter we're going to consider over here. So today's session we're going to discuss about which parameter actually we required in the financial modeling. Today's lecture is a part number 1 we're going to consider, and one by one in the different part we're going to complete this whole financial modeling Excel sheet over here. So basically, while formulation of this financial modeling actually, we require to decide what basic parameter that we required for construction of the financial modeling, in which we're going to calculate the profit and loss account, we're going to calculate the taxation, taxable income calculation, whichever net tax will be payable under the corporate tax or minimum alternate tax. Also, we're going to consider the cash flow analysis. In that, we're going to consider the cash inflow and cash outflow analysis for the 25 years of the span. Also, we're going to consider the internal rate of a return. We're going to calculate the net present value. We're going to calculate the payback period. We're going to calculate, and the equity turn around the project over a span of 25 years. We're going to calculate over here. So one by one, we'll just start to proceed this lecture. So first parameter in the formulation of the financial modeling is the decision of the operational parameter over here. Operational parameter is nothing but when we are starting our solar power plant, that date we call it as a date of commissioning. So first date here will mention what is the date of commissioning of a solar power plant is. So here we are considering the 1st of January we are considering is a date of commissioning of a solar power plant for which we are deciding the financial modeling. Any date where your solar power plant is starting actually, that date you can consider here as a date of commissioning. The second parameter in the operational is the plant capacity. Whatever the plant capacity we are deciding for financial modeling in terms of kilowatt actually, that we have to mention over here. So we'll consider the 10 kilowatt is the plant capacity we're going to mention over here. Then the third parameter we're going to see here is the annual generation. Basically in the annual generation, here actually we are applying one thumb rule. That is 1 kilowatt of a solar installation produces the 4 unit or the 5 units per day over here. Just by applying the thumb rule over here, we're going to construct the logic over here, that is the annual generation of the units in terms of the kilowatt hour over here. So annual generation of a unit in terms of a kilowatt hour, we're going to construct the formula over here. Whenever we are constructing the formula in the Excel sheet, it must be started with the equal to symbol. Once we are writing this equal to symbol, then we are starting this particular formula over here. So equal to in a bracket, we'll take one bracket and we decide what plant capacity is ours. That is a 10 kilowatt of plant capacity is there. So I'm just going to select this particular cell. So select this particular cell over here, multiplied by how many days are there in the overall all year actually, that is a 1 year, how many days are there actually, it is a 365 days are there, and we're going to calculate the annual generation of the 10 kilowatt of the plant capacity. So we'll consider 365 days over here and multiplied by, whenever we have considered the 365 days, then each a day how many number of the units the solar power plant will going to get generated, that we have to consider over here. According to the thumb rule, 1 kilowatt of a solar power plant generate the 4 number of the units on an average in the one day, considering all the season over here, that is average value we are taking over here. So we'll consider or we compare with a 1 kilowatt of the project. So this 4 units per kilowatt we're going to consider over here and enter over here. So from this we came to know in the whole span of a year, that is in 1 year, the annual generations are the 14,600 kilowatt hour. This much units has been generated by the solar power plant. Once we have completed this annual generation over here, then we need to focus on the plant load capacity or the plant load factor over here. So basically when we are calculating the plant load factor, just write equal to symbol over here in a bracket. What is the annual generation of a solar power plant is in the 1 year that we consider. Again we'll take a bracket over here, divided by, we'll take a small bracket over here, and what is the basic plant capacity is, that is a 10 kilowatt. 10 kilowatt capacity is giving 14,600 annual generation units multiplied by 365 days, because we are calculating the plant load factor comparing to all the 365 days over here, multiplied by number of hours in the one day, which is a 24 hours in the one day. Just bracket complete over here. Basically the plant load factor is nothing but when we are comparing the thermal power plant with a solar power plant. Actually thermal power plant is a coal fire power plant and it is working 24/7. So if this power plant is working 24/7 actually, or 24 hours, it will going to feed the electricity to the utility grid out of overall 24 hours actually, after self consuming over here. So basically the solar power plant is having only a some small window span is there for the day. Out of the 24 hours, the peak value of the hours that the solar power plant generates an electricity and feeds the electricity to the utility grid is up to 5 to 6 or 7 max hours are there. So that is why this plant load factor for a solar power plant is lesser comparing to the thermal power plant, the atomic power plant and any other power plant actually. So according to this calculation, we came to know the plant load factor is 17%. It means that comparing to the thermal power plant, the solar power plant is having the less window to feed the electricity to the utility grid over here. According to that, we can analyze over here. Once we have decided the plant load factor, again we have to go on what is the duration in the plant load factor during the initial 10 years over here. Duration in the plant load factor is nothing but whenever we are calculating the annual generation of the units in terms of kilowatt hour for the subsequent 25 years actually, that time we have to consider what is the duration factor is there or derated factor is there, because every year, first year solar power plant will generate 14,600 kilowatt hour number of units. Second year it will generate something lesser than these unit, again the third year again lesser than these unit actually, because as the year goes on the power generation capacity of the solar panel also will going to decrease over here. That is why we have to consider this duration factor in the plant load factor basically in the initial 10 year. Generally in the initial 10 year there has been the decrease of 10% of the annual generation from the solar power plant. And from the 11th year up to the 25 year, there is a steep decrease of the again 20% actually. So when we say the solar power plant in the first year will going to generate 100% of the units, and up to the 25th year, it will going to generate the only the 80% of the units over here. So there has been the steep decrease of the 20% is happening, and that is why we have to consider the duration factor in the plant load in the subsequent calculation over here. Generally, while doing this particular financial modeling over here, the duration factor we are taking as 0.7% for the initial 10 years and 0.68% for the subsequent 11th year up to the 25th year over here. You can take the same duration factor over here also, or you can change this factor like some small amount, that is 0.02% over here. But generally the duration factor it has been given in the solar power panel actually. When we are seeing this data sheet over here, in how many duration factor actually it will going to derate its power in over span of 25 years actually. So that is why we have to consider this duration factor in the plant load over here actually. Then the next parameter in the operational is the PPA term, that is the power purchase agreement term we have to consider over here. Power purchase agreement is nothing but if we are installing the solar power plant and if I want to sell the electricity to the utility grid or the private industry or the Power Exchange India Limited, so that time actually we have to do the bilateral agreement or the power purchase agreement between the two parties over here. So let's say for the 10 kilowatt for residential scale, we are doing the net metering agreement over here. But the power plant capacity more than 1 megawatt actually, we have to do the power purchase agreement. There are three types of power purchase agreements are there. One is a short term agreement, medium term agreement and the long term agreements are there. Basically, the long-term agreements are more beneficial when we are comparing the financial modeling, because it gives a security to us, that is this much span of a year actually our electricity will going to sell, or it has been purchased by the utility grid, that is a distribution licensee or the power exchange limited or any kind of a private industry under the open access market actually. So that is why we have to consider the power purchase agreement term. So let's say for this financial modeling, I am considering the 25 years of the power purchase agreement. But generally the distribution licensee, that is called as a discom of the particular state, they were doing the net metering agreement for the 20 years actually. And most of the industry in the open access market, they doing the power purchase agreement of the 15 years over here. For doing this financial modeling actually, I am going to consider the 25 years of the power purchase agreement in the operational parameters. The second parameter in the operational parameter, or basically in the formulation of a model, is what is the financial levels. We have to decide how many percentage of debt or the loan we are taking, how many percentage of equity we are taking over here. So basically in this financial modeling, we're going to consider the 0% of the debt and the 100% of the capex investment by the end consumer over here. Again, if we are considering the loan over here, we have to mention what is the rate of domestic bank loan is there, that is rate of the interest. We have to consider the repayment period for the domestic bank loan also, and we have to consider how many percentage of a bank loan we are taking from these actually. So in this case, we are taking the 100% of equity model. So we will consider the rate of interest as 0, repayment period as a 0, and the percentage of the bank loan is also 0 over here. In the third case, we need to decide the project fund over here. Project fund is nothing but what is the price of this particular solar power plant per watt peak, per kilowatt peak, and what is the overall cost of the project is. Generally, whenever the empaneled vendor of the particular state is giving this quotation to the end consumer actually, that this much watt peak capacity he will going to install the solar power project, it depends upon the benchmark price of the state actually. Every state or this particular energy development agency has going to decide what should be the benchmark price that which the empaneled vendor will going to install or give services to the end consumer over here. So generally this benchmark price for the 1 kilowatt up to the 10 kilowatt is varies from the 45 rupees up to the 60 rupees also, it will going to varies over here. Benchmark price always change year to year as the year subsequent goes on over here. So in this case, the power developer is giving the price as the 52 rupees per watt peak in the particular range. Again, once we have decided what is the price per watt peak of installation is, we have to decide what is the project cost will be. Project cost is nothing but what is the per watt peak rupees are there installation. We just select this particular cell, multiply by what is the capacity of solar power plant is. Just we go on the step number 1, which is a plant capacity of 10 kilowatt we are taking, multiplied by 1000. We are multiplying by 1000 because of we have to convert the 10 kilowatt term into the wattage term. That is why we are multiplying over here. So after doing this calculation, we came to know the overall project cost or the overall equity investment should be the 5,20,000 rupees to install the 10 kilowatt of the solar project over the consumer rooftop area. Basically in the residential sector, the subsidy parameter is been applicable. Subsidy will be given by or applied by the empaneled vendor who has been authorized empaneled vendor in the energy development agency for the particular state actually. The private vendor cannot able to provide the subsidy to the end consumer over here. So basically, if the residential sector is there, the hospitals are there, institutional sector is there, or any kind of the NGOs are there also, it has been applicable to go for or to apply for the subsidy actually. Subsidy percentage is varying from 20% up to the 30% also. We can get a subsidy according to the overall cost of installation of the project. So basically in this parameter, we will not going to consider any subsidy, but still we will going to consider the accelerated depreciation benefit over here. So the net cost after subsidy we will going to consider as the same as the project cost, because we are not taking any kind of a subsidy under consideration over here. Then we have to decide what is the debt is there in the rupees actually. Our percentage of debt or the loan is 0. So the particular rupees in the debt or the loan is equal to 0 over here, and equity will be same as the project cost because we are investing the 100% of the equity investment over here. Once we have completed this project fund over here, then we need to proceed on the electricity pricing, because when we are calculating the total amount of the revenue generated over a span of 25 years, we have to consider at which price the particular electricity is selling by the utility grid over here. It means that the earlier utility grid who is supplying the electricity to the end consumer actually, at which prices they were selling to the end consumer. So currently prices at this MSCB level is 9.75 rupees is there per kilowatt hour of supply of these units actually. Then we have to consider what is the generation accountable towards the saving. It means that how much number of the units we are going to generated by the solar power plant installation. That we have already been considered in the step number 1 in the operational parameter. Just go and select this particular cell over here. That is annual generation in terms of this kilowatt hour is 14,600 kilowatt hour. Just select this particular cell over here. Then we have to consider what should be the annual escalation in the price of the grid tariff actually, because every year the tariff rate or the electricity supplied by the utility grid, their prices will be hike at some percentage actually. That is why whenever we are calculating the total balance sheet or the revenue generated from the solar power plant actually, we have to consider at which percentage there will be the escalation in the price of the grid tariff will be. So in this case, we are going to consider the 3% of the escalation in the price over here. So we just consider over here, it is a 3% of the annual escalation in the price of grid tariff over here. Next parameter we're going to consider is the operation and the maintenance parameter. Generally, the operation and the maintenance will be the 5% of the capex cost generally we are taking. So I'm writing over here which is a 5% of the overall capex cost, which is 5,20,000 rupees we are going to consider over here project cost and enter over here. So the operation and maintenance expenses for the project is 26,000, which is a 5% of the capex investment over here. Then every year we have to consider what is the percentage increase in the operation and the maintenance cost, because every year the inflation will going to get increase, and simultaneously the prices of the other instrument that we are going to utilize in the solar power plant actually, that also will going to get increase over here. So we have to state over here what is the percentage of increase in the operation and maintenance cost is. So in this case we are considering the 3% of increase in the operation and maintenance cost. Next parameter we're going to consider is the depreciation. Basically the depreciation parameter we required when we are calculating the taxable income and when we are calculating the cash inflow analysis in the particular balance sheet actually. There are three type of the depreciation we can take it over here. One is the straight line method of depreciation, which is called as the book depreciation rate. Third parameter is the normal depreciation rate, because excluding the solar power plant and the wind power plant which comes under the renewable sector, all other power plant will allow to depreciate their asset under the balance sheet by 15% over here. So we just fix the percentage of the book depreciation rate. We are taking here 5.28%. That is the straight line method of depreciation or the constant depreciation in the every year. Then we have to consider the normal depreciation rate. Other power plant excluding the solar power plant and the wind power plant, they were allowed to depreciate their asset by an amount of the 15% over here. But generally according to the central state policy of the India actually, the solar power plant will allow to depreciate their asset at the higher percentage. It is called as the accelerated depreciation of the particular case actually. So basically when the solar power plant will not applicable for the subsidy, like in the commercial sector, like in the industrial sector actually, to promote the green energy or the solar energy in the commercial and industrial sector, the government of India has been introduced the term of called as an accelerated depreciation over here. It means that we can allow to depreciate our asset at the higher percentage, like a 40%. Likewise, we can say in the first year itself, we are depreciating the asset by the higher percentage. That is why it is called as the accelerated depreciation over here actually. And the percentage of the accelerated depreciation, it has been decided from the 1st of April 2017 as the 40%. Earlier of the 1st of April 2017, the accelerated depreciation percentage was the 80%. But next there is a policy has been refined actually, and this percentage has been decreased up to the 40%. So basically in the first year, second year, third year, likewise, we can depreciate our asset at a higher percentage of the 40%. We call it as a accelerated depreciation over here. And this benefit only and only been applicable for the renewable sector only. The next parameter we're going to decide is the taxation parameter. How much taxes will be applicable and what percentage of the taxes will be applicable over here. Generally, the corporate tax will be applicable over a solar power plant installation, and the minimum alternate tax will also be applicable over here. Basically, those company who is installing the solar power plant, who is taking the ownership of the solar power plant actually, if their annual turnover is between the 250 crore rupees actually, the flat rate of corporate tax will be 25% we are taking. And the company who is installing the solar power plant and taking the ownership of a solar power plant and whose turnover will be more than 250 crore rupees, the flat rate of corporate tax will be the 30%. There are excess charges also been applied when we are putting the corporate tax actually, like the health and the educational cess will also be applicable. But in this balance sheet, we're going to consider only the flat tax rate which has been decided by the central government. The company who is taking the ownership for this particular case study actually, their annual turnover is between the 250 crore rupees. So that is why we take only the flat rate excluding the health and the educational cess over here. That is the 25% of the corporate tax over here. Again, we have to consider this minimum alternate tax also, because some of the companies might show the taxable income, because the corporate tax will be calculated on the taxable income, and they might show the taxable income as a lesser value over here, so they might not pay the tax to the government actually. So that is why the Indian government has been introduced the minimum alternate tax like a concept over here. Minimum alternate tax will be applicable on the profit before tax. Before paying the taxes, what is the profit will be there, or what is the profit earned through the solar power plant actually. According to that, the company has to pay the minimum alternate tax. Whichever tax will be higher, either the corporate tax will higher or rather the minimum alternate tax will be higher, both up to whichever tax will be higher, that tax we have to pay to the central government actually. So the percentage of the minimum alternate tax will be 18%, it has been decided, and other health and the education surcharges or the cess, if we consider, it will come up to the 20% also we can take. But in this balance sheet, we are going to consider the flat rate of the corporate tax and the flat rate of the minimum alternate tax over here. So basically in the today's session, we have seen whatever the different parameters that are required while formulating the Excel sheet actually in the financial modeling of solar power plant. In the part number 2, in the next lecture and the next video actually, we're going to consider we're going to calculate the profit and loss account statement and the tax calculation over here subsequently. Thank you for watching the video. Just share the video to your friends also. Thank you for the watching.